I'm Ashton Addison from Blockwest Capital for Investment Pitch Media, and today on the Crypto Coin Show we have Elie Azzi and Antoine Loth, the co-founders of Merlin by VALK Technologies. Gentlemen, welcome to the show, and thank you for taking the time.
Thanks, Ashton. Pleasure to be here.
Thank you.
Likewise, I'm excited to dive into more of understanding the world of DeFi. How do you put it in one great picture that you can understand? There's still a lot of isolated silos in blockchain and DeFi and value being locked over here on this blockchain and then over here, and it's hard to keep track, honestly, because there's so much going on. I know that you guys have been working on a technology to help with that, and you probably have a better understanding of managing your DeFi investments and trading than I do. So I'm excited to dive into what your team's built. Antoine, if you could just kick it off by just giving us a little intro on yourselves and what is Merlin, and then we'll dive into all the details after that.
Yeah, for sure. So here on the interview, you have Elie and myself. We're both the co-founders. Elie is CPO, I'm CEO. We've been working together ourselves and the whole team actually for a little more than 3 years. Started out by building a project in tokenization initially. And with DeFi summer and interviewing a lot of traders and hedge funds, we basically saw a huge demand in the market for being able to understand how much money you've made or lost in DeFi to begin with, which is really what we're focusing on right now. And then going much deeper in the analytics around DeFi markets, around DeFi traders' performances. And thanks to the machine we've built, there's a ton of use cases that we want to explore and that I hope we can explain in more detail today. Quick word about the team. We're about 18 people right now, really distributed around the world, with one single focus and one single mission, which is to make DeFi smarter and easier for everyone.
Great intro, Antoine, and yeah, it's with DeFi sort of popping up on, starting on Ethereum and then moving to all the other ecosystems, and the bridges and different methods of trying to sort of bridge together different DeFi ecosystems into one. I feel like we're at a turning point where all of this is going to be easier to manage. But at the time, we need softwares like Merlin to be able to figure out what's going on in one great picture. Now, Elie, if you could explain in more detail, how does that exactly work? Let's say that I'm a beginner in DeFi. I've experimented with a couple different staking, lending, liquidity provisions. How do I start using Merlin? What exactly does it do to give me a good picture of the wins and losses?
Exactly. So I should go back and explain why did we build Merlin. Funny enough, in 2021, when we were interviewing financial institutions mainly, start asking them, how are you gathering your positions in DeFi? How are you calculating your profit and loss? And we were so shocked by their feedback. Say, hey guys, I don't know what's my P&L, or I have a spreadsheet. Every time I do a trade, I start writing my positions, my entry price, and so on. And today, when we are pitching the product to people in September of 2022, we ask them the same question. How do you calculate your P&L in DeFi? Same answers. So in fact, in 2017 was a great year for everyone. So the price of crypto went up. Everyone was focusing on trading cryptos on centralized exchanges. So a centralized exchange has an overview of all your positions. So buy spot, you sell, you enter into future options. You can do whatever you want, but everything is on one platform. Can it be Coinbase, Binance, Kraken, or others? So if you ask Binance, calculate my P&L, they know exactly at what point you entered the position, at what point you exited this position, at what price, and so on. So they can calculate everything for you, and you go to their platform, they show you a P&L. That's great. Now, in 2020, 2021, when we saw the rise of DeFi and a lot of institutional, but also retail, going into DeFi, start trading, they're not trading on a centralized platform. So there is no one that can aggregate all your transactions And at the end of the day, they would tell you, this is your P&L, or this is how much you've been doing well, or bad, or trade, or aggregate, and all your positions. In fact, this centralization exists, but it's not in a platform, it's on the blockchain. The problem is that it's true, we say blockchain is open, anyone can go and read, yes, but few people, they know how to go extract the right information, read it, and make analysis out of it. So this is why we created Merlin. So exactly what do? We are able to understand all the history of transactions of a user, and we can provide them with a clear understanding of their behavior. Now, there is a lot of tools out there that are very good, and I can name some like DBank, Zapper, Ethereum, Aidboard, and API Vision, and others. They do a great job for someone that is interested to know what is my current position. So, for example, now today, let's say now it's 7 p.m. here. So at 7 p.m., what is my net worth? So what they do is they contact those protocols where you have invested in, they get the pricing of your position, and they tell you this is how much you own. And those are your DeFi positions. But as a trader, I don't only care about my current positions. What I want to know is how well I've been doing in the past. Because P&L is always based on what time I entered a position, and I compare it at the current moment. So those aggregators are very good, but what they're doing is that extracting information from different protocols and showing them to you. So if you go to each protocol that you have invested in, and you take a snapshot, you put them in an Excel sheet and you do the calculation, you would see the same information that if you go to DBank or Zapper. But what no one is able to give you is the history of the transaction that you made and the P&L in dollar terms. So why we speak about dollar terms? Because let's say I entered into a liquidity pool, ETH/USDT, 6 months ago. So ETH price went, I would say, 50%, if not more, down. I might be generating a lot of fees, but those fees, they are paid in ETH. So if the price of ETH compared to dollar decreased, the value of my investment decreased. So all those APY that we hear about, 5, 10, 20, even 100%, they are kind of an illusion, because they are based on the currency that we are entering. But we're not taking the volatility of this currency compared to the dollar. And this is what we are trying to tell the people, hey, those APY are only for how much you will get in the same currency that you entered, but not in dollar terms. So yeah, this is a very quick overview of what we're doing, why we did it.
That's great, Elie, and you're right. I've seen a lot of high APYs on coins, and it's over 100% or something that seems unsustainable. And meanwhile, the base price of that coin has sort of dropped 90% by the time you're finished getting your yield, and you're really actually down. You think you have a lot more coins, but they're worthless. And it's funny about the high APY, because like a lot of people that enter into the crypto, mainly like the Bitcoin fanatic guy, they entered because they wanted to be they wanted to have a currency that is not backed by government, that is deflationary, and that we cannot print more of it. And when you go to a protocol that is proposing you 100% APY, and here I'm not speaking about our product, the only way you can get those high APY is by producing more of your token and by inflating your market and decreasing the price of someone's token. So I got that the competitive advantage you're talking about is really understanding where you're at from the past transactions. A lot of times it's easy to go on the blockchain and search your address and see this is your current balance. Like, we know what the current price of the assets are and this is how much you have. But calculating it with all those different currencies of Ethereum and the altcoins, and then understanding the USD gain or loss is obviously important. Now, with people looking to get to that point easily, how does it work if you start using Merlin? Do you just connect your MetaMask or wallet directly onto the platform, and then it just does all the calculations and says, here's your gain from the last year? Or what's the process in that?
So mainly it's 2 clicks. First is to type mymerlin.io. This is the first click. And the second click is to connect your wallet. And boom, you have everything. Now, if you have several wallets, then you can start copy-pasting those wallets and putting them. Think about it like Etherscan. Just put your wallet, and we already show you all your information. Now, of course, we are adding the protocol that we are supporting for the PNL one by one. So we would give you your net worth, but we would calculate your PNL for a certain amount of protocol. We started by taking the biggest in terms of TVL, and we're going down the road. So from now until the end of the year, we'll have around 30 protocols supported on Ethereum, BSC, Avalanche, and Polygon.
Okay, great. And I've seen DeFi protocols like Yearn Finance, for example. One of the reasons that protocol was great in DeFi, because it would often show you, your assets are being staked here for this amount of return, but we're able to switch you to higher returns, or there's always new opportunities daily and even more frequently than that happening in DeFi, where it's possible to get returns on your assets. Do you and your team recommend any specific DeFi, in the portfolio tracking? Is it like, hey, you should check this out for more yields, or maybe you could earn a better yield on your portfolio if you tried this, or is it just managing what they have?
No, we are not proposing financial advisory or for people to allocate funds from one strategy to another strategy. For now, what we are focusing on is understanding you as a user, what you have, and how with the information that we are providing you, you can take better decisions to invest or to stop loss, for example, on one strategy that you've used. Now, in a market like the one that you're seeing, there is a lot of volatility, and when you calculate the APY can be only valuable for the next 24 hours or 48 hours. But when the prices decreases or increase, everything changes, because the APY is a variable of the prices of the underlying crypto.
And if I may add something here to what Elie said, which is 100% correct. We want to take really a step-by-step approach to the analysis we give about the industry. Right now we focus on the wallets, but should we start focusing on the performance of liquidity pools at some point? It is very important to know that it's not only about what the APY is, it's also about taking other metrics into account when you make a decision. Some related to risk, some related to also macro environments, the crypto markets in general, and so on and so forth, right? So I think, and I'm not speaking about Yearn in particular, right, but just this general consensus of just focusing on the APY alone is a quite risky approach, as someone should have many other factors in mind when they decide to allocate liquidity to one pool or another.
That's a great point, Antoine, because some of these, especially the new up-and-coming DeFi liquidity pools that come out that have unsustainable amounts of APY, are often very high risk, if not a chance to lose all your funds. And if you just looked at the highest APY, you'd probably lose all your funds eventually in some kind of rug pull, and it's probably not the best way to go.
Exactly right. And I mean, there's these quantitative metrics you can look at, but there's also stuff that is not quantitative, like for example the team, their reputation, and many other things. So yeah, we tend to take a step-by-step approach, do one thing really well, and when we expand, and should we go towards that direction, I can tell you we will look at a more holistic approach.
For example, one of the information that we will propose to our customers very soon is you enter into a pool, what's the percentage stake of that you have? For example, it might be a very small pool and with very illogical APY. If you own 20% of this pool, if it exists, maybe someone else has, you can get dumped by someone else. The second step is to show you what is the overall cap table of this pool. So is it the biggest owner has 5%, which is cool, or the biggest owner has 6%, which is very risky. So this is what Antoine meant when we say we will provide you with more information about the pool that you are entering. And we think this is more safer and wiser information to follow than only to look at the APY.
That's why we say smart DeFi.
Yes, definitely got to be smart about it. And Antoine, where do you see Merlin, in the next bull cycle? Hopefully DeFi continues to grow and gets larger than it was in 2021 and beyond, and millions of new people start joining in. Where do you see Merlin's technology fitting into DeFi for beginners, intermediate, and advanced users?
So the only thing that I can't predict is the technical roadmap, because you can confirm that, because we are always adapting to the market, and to we have a quite empirical approach, right, and very, very client-centered, market-centered. So this will certainly evolve, and will certainly adapt to what we see and to the really cool stuff our team is constantly inventing and innovating on. But what I can tell you is that where we want to be in the next bull run is that we want to be a leader. Obviously, we want to say, and we say internally, we want to be the number one, but let's say at least a leader to be reasonable in DeFi analytics in the market. And we first want to be able to cater for the current DeFi users, whether they are individual or retail, as you can call them, or institutional. And so far, since we launched the tool, we've had very good returns and traction from both categories, right? Now, as we know, and everyone is speaking about the next bull run as being a run where DeFi will be mainstream as opposed to a niche as it was in the previous one. So obviously, where we're aiming for, and I think if you've tried the app, you can already see that we've really worked on that. We want to be able to have a product that appeals to a larger audience. What does that mean? If I speak about a larger audience on the retail space, it means having a intuitive and easy to understand, user experience and app and platform that a beginner trader, but also someone that is more advanced, can navigate on. A platform that is easy to use, but also contains enough information for more advanced traders on the retail side. And if I look at the institutional side, this one I think we've already covered for the next wave. It's giving any type of institutional player, whether they're a hedge fund, asset manager, custodian, and others, the same level of standards and accuracy and precision you get in TradFi. Because that's exactly what Elie was saying. Although the market has boomed and grew a lot, the standards in terms of the reporting and the analytics, especially in DeFi, haven't followed up to the speed of the growth and the innovation in terms of other things. So in 2 words, making it easy for the masses to access and keeping the same levels and standards of excellence and precision that we've already built for the institutional market. Right now we're focused on the current users, but if we continue this way, we'll be in a very good position in the next bull run to also capture, what people say is the next 100 million or billion users or whatever you want to call it.
Amazing. Well, I'm looking forward to that, and to seeing the technical roadmap grow out. I have used a few DeFi portfolio trackers, and I feel like they're a great addition that everybody should start using, because eventually I feel like everybody that's in crypto is going to use DeFi in one way or another. So they might as well get started checking out the best way to manage their portfolios and see how they're doing. For the viewers that want to check out more on Merlin and use it, what is the best way for them to just get started with that?
Elie told you, you go on our website and you check My Merlin, MyMerlin.io, mymerlin.io, and you can access it directly, either by connecting your wallet, copy pasting it, and even if you don't have a wallet or don't know any wallet address and you just want to check it out and see how it looks, there's a demo wallet that you can click and navigate to the platform. You can sign up to our newsletter as well to stay updated on the latest features and releases we do. Check out our social media as well. We like to interact a lot with the community and get a lot of feedback from them to improve the product. And the more we can help people and the more we can educate the community, the happier we'll be, because this will mean a larger audience for our tools and more people that we can help.
Definitely. All right, sounds great, gentlemen. Thank you so much for your time. I will leave the link to My Merlin and the socials in the description box below as well. All the best with everything moving forward in DeFi, and let's follow up in the near future.
Thanks a lot, Ashton.